Recording in progress.
Ramadan is a month of fasting, reflection, and spiritual growth. As we engage in prayer and community, many of us experience remarkable change in our daily routines, especially in our expenses. In abstaining from food and entertainment, many of us find ourselves with surplus disposable income. What if we could channel that saved money into something that nourishes our future, both personally and financially? This Ramadan, consider investing yourself with Lead Capital. Our fixed income fund and balance fund provide a pathway for financial growth, allowing you to achieve your dreams and secure a better future. Just imagine using the money saved from fasting to empower your personal growth, whether it's saving money for your children's education, investing for capital growth, or securing a comfortable retirement. Lead Capital can help you achieve those goals. Just as fasting strengthens our inner selves, investing strengthens our financial foundation. Lead Capital offers a transparent and ethical way to grow your wealth while honoring the spirit of Ramadan.
Download the Lead Trader app, available on Google Play Store and also on Apple Play Store, or you can use the website www.leadtraderng.com to begin your investment journey.
Ramadan.
How far, Kunle? Salary don't show. How you plan spend your power?
You don't mean. Still the same thing as usual. Oh. I'm paying my bills, getting some groceries for the house, and treating myself to some ugly moments on the week.
Totally understand. Or have you thought about investing some of your salary instead of spending it all?
Invest, ke? With what money? My guy, investment is rich people talk. As it is, I'm still struggling to cover all my bills from this my little salary.
Nah, not at all. Investing is for everyone, no matter your income. Even small amounts can grow over time if you start early.
Oh yeah, you don't convince me. But then, how do I start up this investment in my guy? What are the steps to it?
Start by setting up a budget. Calculate how much you need for your expenses and all your necessities, and then identify how much is left for investing. Lead Capital offers several investment products based on your risk appetite. For starters, we have Lead Fixed Income Fund. If you don't like risk, it's a very low risk investment product, and your money is invested for a minimum of 90 days and you earn dividends biannually. That's twice in a year. It also gives very good return. The yield is currently above 18%. We also have the Lead Balance Fund. If you're interested in one with higher risk or also higher returns due to the equities aspect of the fund, the money is invested for a minimum of 90 days and you get paid dividends biannually, and the yield is currently above 23%.
That doesn't sound too hard, oh my guy. How come I didn't know about these things before now?
Also consider setting an auto debit to your investment account as soon as you get paid. Even if it's 20k, 50k monthly, it will go a very long way.
Oh yeah, now I guess I.
Okay, good morning, everyone. Good morning, valued investors. It's a pleasure to welcome you to another beautiful week and beautiful day. As a tradition, we'll take through our financial market review, and we're going to start with the equities market, and then we also take a look at what transpired in fixed income market. We're also going to follow this headline. So for our guidance, review of our market, that's very is a priority. We also need to give you updates on the full year results, so that results are, we've seen some results in the market. And we've also done some analysis further on our dividend expectation. And we're also bringing corporate action tracker this time around, because we have also seen some corporate actions in the market, and then our stock recommendation, and then we'll go through our expectations for the week. In the course of last week, market also closed on a bearish note, and then investors need not to worry this time around, because in the last 2 weeks now, we've seen a bearish trend in the market. The previous week, market lost 0.61%, and last week again, market also witnessed another bearish moment. And it's not only peculiar to the equities market. We must get it right that when we see continuous depreciation in the equities market, that always present opportunities for valued investors. Because if you look at the global equities market as well, and we've seen some depreciation in the major indices. If you look at S&P 500 last week, it also lost minus 0.5%. Even Financial Times of Stock Exchange of 100, that capture 100 most capitalized stock in the UK, also lost almost 7%. Nike does also represents the Japanese stock exchange, also lost some in value. It's to tell us that equities market cannot continue to be on a bullish trend. We see some moderation in the pricing. You also see some bad interest. So we must get it right that when such thing happened, investors need not to worry. We'll bring out our strategy, stop panic selling, one. And secondly, we also need to take a look at our portfolio. We'll find a way to rebalance our portfolio to create more value. So let's get it right, and let us be guided. So because I've got some calls last week when markets we saw witness continuous price depreciation. It's always this opportunity for people that have been waiting, looking or targeting certain price in mind. So in the course of last week, the graph shows that for the entire 5 trading days, it was only on Thursday we saw little uptick in the ASI. The other days, we saw sell pressure across the tickers, across major indices. So in banking, insurance, consumer, industrial, even oil and gas. But when we get to the other slide, we're going to see those tickers that actually depreciated the market. So let's also look at these pie charts. We usually showcase this in our presentation to tell us that our equities market is still very strong, and the financial markets will still continue to dominate the equities market. Last week, despite the share pressure, major activities that worth almost 69% for the entire transaction was cornered by financial service, and we also saw some movement in consumer and the service sector and others as well. So to tell us that financial service industry, as somebody asked question in one of our presentations, that why is it that financial service always dominate our recommendation? This is the reason. You can see is that they contributed to large volume transaction. And in terms of the ASI, it lost 1.19%, and then it has also gone to 106,533.60 basis points. And when you look at the trade turnover was also lower, 1.82 billion, 147.23 billion. In contrast to what market witnessed the previous week, about 1.85 billion worth of shares, and they also worth 51.39 billion. In terms of the volume, it was lesser by almost 1.2%. And when you also look at the value, close to almost 8%. But in financial service firms still contributed to the major activities, 1.26 billion, worth 27 billion. In terms of percentage contribution to the volume, 69.31%, while in terms of value, 58.90%. And the consumer sector also followed, and then we also saw some high interest in some companies or tickers that are under a service industry. So in terms of a transaction, major activities, major trading activities took place around Zenith Bank, Fidelity Bank, and Access Bank. So people are also buying, ensuring that they have those tickers in their portfolio. Why? As the prices are going down, it presents good opportunity for people that also want to buy. When you take a look at the market, the global overview of the market, for the very first time, all major indices, even including the broad index, lost. NGX Banking lost 2.87%. We saw sell pressure on some major tickers, the likes of First Bank, Zenith Bank, GTB, CMB and Wema Bank. Consumer as well, we saw tickers under that. The Nigerian periods of this world also lost in price. Industrial, we didn't actually see major movement. We saw equities also dropping. While for insurance, we saw Sovereign Insurance, we saw Wapik, Aiku. All those is a reaction to the markets. Also lost 2.33%. Oil and gas, we also saw Wando, we saw a China oil also reducing in their market prices. So these are the reasons. But the good thing is that when things happens like this, the investor needs to be careful. We don't need to do panic selling. You have to bring out your strategy. This is the time you need to rebalance your portfolio. This is the time you also need to bring in fresh cash you have to ensure that your weighted average cost of holding also increase, because you buy more, you're going to have a lower price in your portfolio. So in terms of the earnings update, Stockholm Prudential results also came out last week. Their gross earning was up by 31.49%, and then we are much interested about their profit for the year, and then the profit after tax also went up by 87.98%. So, and the basic earnings per share has also gone up by 89.59%. So the earnings per share currently stood at 91 kobo, and the company has also declared a bonus of 1 for 1, and then a dividend of 60 kobo. So in terms of United Capital, is the great action we saw in the market was quite below our expectation. But the good thing is that at least they came out with a corporate action with dividend declaration. Don't also forget that this same company last year did the bonus of 1 for 1, and then 3 for 1, and then they also declared 91 kobo. Investors should also consider that and factor it into their portfolio, because I've seen people saying the 50 kobo is not sufficient enough. But if you have benefited from the bonus and the dividends, and then your portfolio will have added over 50% than with what you are currently holding before the declaration. So this is the result for the African Prudential. Earnings per share 2024 financials stood at 184 kobo. It was lesser than what they had last year. Don't also forget that their earnings per share is not fully diluted. They have over 18 billion capitalization. So we still place this company on high, because we still look at the current market price as a good buy. And then for the Champions Brewery, let's also go to the earnings per share. It has also gone up from 5 kobo to 9 kobo. They have also declared 6 kobo. They are under consumer industry. We look at the tickers under consumer industry. It's been very tough. Most of them are really suffered from the foreign exchange losses. So when you see companies coming out and bringing results that are also positive to the market, I think we should applaud them. It's an indications that the 2025 is going to be better, because all the indicators, the macroeconomic variable improvement we have also seen shows clearly that the finance cost that has really taken major activities in some of the financials of this company is likely to improve, and that is going to improve their performance in terms of the profit after tax. We expect better performance in the company under that index. The same thing, Dangote Sugar, the price was also at a loss of 15 naira 86 kobo. With Capital, we have placed Dangote Sugar in our old recommendation for a very long time. We are trying to see the company to come out with strong action plan as to how they are going to navigate those losses. But for now, you see in our old recommendation, we won't say you should sell now. Seplat also did fantastically well in their results. And we've seen the revenue up by 137% from a 696 billion to 1.6 trillion. Well, what is more important is that we should also not forget that this same company has also expanded. They have also invested in major assets that are worth over $1 billion. So that is a plus to them. But the earnings per share has also gone up by 315.75%. They are currently having 385 naira 61 kobo as earnings per share. So, and the way they also do their corporate action is on quarterly basis. So for the quarter one, for the final year for 2024, they have also declared 3.6 cents. When you translate that into naira, that you will give almost 17 naira. But we should expect more corporate action in the subsequent quarter. You usually do Q1, Q3. By the time you aggregate all this together, you look at it that they're also doing very well when you look at the industry average in terms of earnings per share. Our expectation, the analyzed dividend has also gone up, because the little depreciation we have seen in the all-share index last week, even the previous week, has also given investors better opportunity to also invest in some of these tickers. For Access Bank, analyzed dividend has gone to 34 naira, because it's currently trading 23 naira 85 kobo. GTB, UBA, all these tickers, the banking, because that index suffered almost minus negative 2.37%. So that has also presented good entry price for all the investors who have not actually invested in all these companies. So let's consider these companies 1 to 15, 1 to 14. It's cut across all the major indices under our coverage. The prices are they're also very good, and they are trading far below the intrinsic value. When you look at the industry average of these banks and some of the other companies, when you also consider what each of these companies is giving in terms of their EPS, price to book ratio, and the PE ratio, they are some are far below. The PE ratio of some of these tickers are below the industry average, while the EPS of some of these tickers are also above the industry average. So let's take advantage of that. For our corporate actions tracker, we've seen Geregu declaring 8.50 naira. We're going to send out the slides so you can see it. African Prudential, a bonus of 1 for 1 and 60 kobo. That's also very good. We change it to our buy recommendation. Transcorp Progress 64 kobo. Transcorp Corporation 60 kobo. Lafarge 1 naira 20 kobo. Nascon 2 naira. Dangote Sugar and Dangote Cement 30 naira. Wa Cement 2 naira 5 kobo. Mikio Industry 15 kobo and Seplat 3 cents. The registrars, you have it at the extreme end of the schedule. We'll send it out after the presentation. For our recommendation, we have also done some adjustments on our recommendation. Access Bank for the banking, we have 1 to 30 as our recommendation. We are going to see a list of recommendations our research team has sent out this morning. Take a look at it, and then you can have this green third 1 to 30. They are in green color. They also form part of our recommendation. We've also changed African Prudential to buy because of that corporate action, so that investors can also benefit. And then with the improved performance, 31 to 36, we also placed it on old recommendation: Airtel Africa, MTN, Cadbury, Okomu, Presco, and Stanbic IBTC. And for this week, our sell recommendation, Eternal is one of them. Geregu is also one of them, and the Transcorp Hotel. In terms of our expectations for the week, we're also expecting some results to also hit the market. We've seen some. We also expect that as those results are also coming to the market, they are also going to propel the ASI, especially the banking sector, is expected to make some recovery. Investors that are also anticipating dividends, this is the time they are also going to take position. And then we also expect that's also going to reflect in the ASI and the markets, the banking index, and some other indices will also close lower, higher. So we also anticipate investor involvement in equities markets. So because we've seen moderation in the fixed income yield, we are expecting to see some funds in the equities market. That is going to happen soon because MPC is meeting in May 2025. So we are not ruling out possibility of a profit taking within the week, but at minimum level. So, but the good thing is that the pricing will still present good entry points, and then we also consider equities markets closing on a positive note this week because of some of these expectations we had also projected in the slide. So thank you. It's time for the fixed income presentation, and then we can move to the Q&A. Thank you. Mr. Oladipo, over to you.
Okay, good morning, everyone, and thanks for joining the session this morning. Very quickly, we'll look at what transpired at the fixed income markets. Everything we'll be discussing today, I'll be linking it with all we saw at the equities market last week. We saw that the ASI lost almost 120 basis points last week, and we can also see a direct correlation between what is happening in the equities market and the fixed income market. I think we've been very consistent in establishing the fact that rates are beginning to drop. That is what everyone that has always joined this call and testified to. And we also see similar things play out last week. So what we've noticed in the market is people are trying to take advantage of the level we currently have in the fixed income market. Hence, the marginal drop we've been seeing in the equities market for a while. But for last week, looking at the funding rates, we saw some slight increase in the funding rates as the open buyback rates increased by 34 basis points and the overnight rate increased by 33 basis points and 34 basis points respectively. And that's on the back of liquidity levels. Last week, we had some significant actions in the market. We had the Nigerian Treasury bills auction on Wednesday. We also had the OMO auction on Friday. So all those actually suppressed liquidity in the market to close the week at negative 1.3 trillion naira. And at the Treasury bills market, before the auction I held on Wednesday, the market was trading on the very quiet notes, as most people were just waiting to see how the auction will play out this week. Considering that at the last auction, stop rate was at 18.43%. Some people were of the opinion that since rate was held constant at the last MPC meeting at 27.5. Now we are likely going to see rates not declining at the auction. So we saw that influence decisions at the market last week, not until Wednesday when the auction held. 1,650 billion worth of Nigerian Treasury was on offer. We saw total subscription of about 1.9 trillion and total allotment of 830 billion. But what was quite interesting is, despite the levels where rates are, we still saw a decline in the rates, which actually threw the market off the balance at the end of the auction. On the 91-day, rates remained flat at 17%. On the 182-day, rate declined by 25 basis points to 17.75. And on the 364-day, we saw a 61 basis point decline from 18.43 to 17.82%. So some people are now looking at it from the angle of, if 91, 182, and the 364-day are now on the same level in terms of stop rate, 17.5, 17.82%, it causes some form of dilemma for our investors. Because somebody asked me specifically last week that if 1 year Treasury is at 17.82, 6-month Treasury is at 17.75, why should I go for 1 year Treasury bill? So, but the point I tried to point out, the point I tried to make the client understand was, if you look at the yield for the 1 year is still at 21.6, so it's advisable that you just try as much as possible to take advantage of what you currently have in the market. And on the back of that, there's also another auction holding this week, which means we are having Nigerian Treasury bills auction back to back in 2 weeks. This week we have about 170 billion worth of bill will be on offer, and we are projecting that might also further suppress our rates in the market. But in all of this, the story behind this is that the level we still have is still encouraging. We just like to advise clients to also continue to key in their funds, especially in the fixed income markets, because we are likely not going to have the levels we have currently into the future. Next, please. So looking at the discount rate trend, okay, I think we need to update it. But at the last auction, like I mentioned, rates further declined on the 5th of March, 2025 auction to 17.82, which further brings down the slope of the discount rate. But for the bond market was very quiet last week, as most of the activities we saw were more in the money markets, as the Treasury bills and the OMO segment. So the bond market didn't really see much activity. But notwithstanding, we still saw some activities, some trading pass through the 26, the 28, the 34s, the 35s, and the 40s. By the end of the week, we saw rates decline marginally by 2 basis points to close at 18.46%. But for the foreign exchange market, we saw in a twist of events, we saw Naira depreciating against the US dollar. I think for the past 2 to 3 weeks, we've had a consistent strengthening of the Naira, but we saw a reversal of that. I think that was starting from on Tuesday last week, where Naira began to show sign of weakness. But at the end of the week, at the official window, we saw Naira depreciating by 114 basis points to close at 1,517 Naira at 24 kobo. And for the forwards contracts, we also saw similar decline across board from the 1 month to the 2 months to the 3 and to the 1 year by 182 basis points, 173 basis points, 207 basis points, 240 basis points, and 267 basis points. And the next question might be, what will be the future or the direction we should be looking at? Like we've consistently maintained, the foreign exchange market is still quite volatile. So it's just advised that we keep our ears open while we bring to you news that we currently have in the market. But one thing we should possibly look at is that crude oil prices are beginning to drop. So we think that might have some effects on our foreign exchange market, because what that simply means is that we'll likely have reduced the FX revenue for the government. I think as of this morning, the crude oil prices has lost close to about 40 basis points. But we'll keep the house updated on happenings in this market. And for our expectation for this week, what do we expect to play out in the week? We also expect that funding rates would remain elevated on the back of the Treasury bills auction holding this week. For the Treasury bills and the secondary bills market, so Treasury bills and the bond secondary markets, we expect that they will be influenced by our liquidity levels in the system. But in all of this, we would also like to reiterate the various product offerings by the house, because at the end of the day, an average investor would ask, how do I take advantage of all these things you're seeing in the market? Rates are dropping. I should make decisions now. The various products that we have in-house, and well curated to cut across the various segments of the market, from the equities market to the fixed income market. Also looking at the to the foreign exchange market. The products have been well curated. And from our lead fixed income fund, is a fixed income fund where you get to enjoy stable growth in your investment, and then the fund pays out dividend twice a year. And for those who have been who have invested or subscribed to these funds, they can testify to what we're saying currently for the lead balance fund. Although the equities market is currently experiencing some downturn, but like my colleague had rightly said, it is an opportunity for people to buy. As such, bringing in your funds into this portfolio means you'll be buying at a cheaper rate, and there's a potential for you to make significant returns. And for our lead dollar fund, to hedge against the volatility in naira, like we've been able to showcase to you all, over time the naira is still quite volatile. We've not been able to get a hold of the levels where the naira will be trading. So that's where the lead dollar fund comes in. It gives you an opportunity to hedge against the volatility of the naira, thereby still maintaining your wealth appreciation. With as low as $10,000, $20,000, you can get to invest in the $3 mutual fund. And for our Eurobond trading, with a minimum of $200,000, you get to invest in the opportunities inherent to those markets. If there are questions, if there are clarifications, we are always there to provide guidance and answers as may be required. And with this, we've come to the end of our presentation. It's time for questions and answers. If you have questions, there are clarifications you require, and now is the time to bring them forward. Thank you for listening. Okay, we have some questions here. What
is on African Prudential PLC? You put it on buy this time. Yes, if you look at you are very right. We've been placing this company on sell, but now that we have seen their final year performance of 2024, we have seen some improvement in that result. Earnings per share of 48 kobo to 991 kobo, and then the profit after tax of almost 480, almost 4 billion to 964 million to 1.8 billion, over 50%. And they are also doing bonus of 1-for-1 and dividend of 60 kobo. That's very impressive to the market. So that's why we are putting it on buy. So this week is on buy. If you buy, it's worth it with the corporate action. What is on fire? Honestly, put the two stock on buy this time. Okay, for African Prudential, it's the same reason I presented, because of the corporate action and because of the better performance for the year 2024 than the 2023. And as for Nestle, of course, their result wasn't encouraging. We've seen negative, they've also recorded. But we have also seen market reactions that despite the result, the market still reacted positively. And then we place it on buy, because sometimes it's not only you don't only look at the fundamental analysis, you also need to look at the trend analysis. Having tracked the 52 high and 52 weeks low, looking trend analysis, we have discovered that the current market price is trading, it's worth buying. So we have also considered that it will not go lower than the price is trading. And over time, when we see a new corporate action or a new development around the company, is likely to move up, because what is really affecting the company in the FX devaluation, and we have seen some moderation in foreign exchange market, that's likely to impact their results in the subsequent quarters and in 2025 and beyond. Somebody said, Guinness in your buy recommendation, are they not going to delist? There's no possibility of delisting. Last week Friday, of course, a publication also came out by a company called N7 Nigeria. They're also trying to buy additional stake in Nestle Nigeria. But if you look at the floats within the market, because any company that is listed in equities market, you are to have a float of almost 20%, meaning that your 20% of the total outstanding shares must reflect in the market at the stock exchange. So they are still within the float of 20%. So for now, we place it on buy, because don't also forget that one time we say they are in 2025 financials, and then when the new investor, the Tolerem, when they took over the company, we've seen that the earnings per share as at the second quarter of 2025 moved to 10 naira from a negative of over 15 naira. So that's why we are also placing it on buy. So even if they are going to delist, it's going to be to the benefit of the investor. They are going to pay you higher return, higher delisting value, just as Flowermate did. So thank you. questions, contribution? Yes, it's a special dividend.
You're correct. Seplat declared two dividend for Q4, the final dividend and the special dividend of 3.3, just like you pointed out. So that makes a total of 6.9 cents. Sorry, yeah, 69 cents. Thank you.
69 cents, yes. Yes.
We've submitted for Madam for assurance. I've not received my pay. We have submitted the form submitted to us now, and we contact the registrar for the update on it before the end of the day. Thank you.
Somebody said, what is on our buy list? Of course, the company is still under suspension from the NGS, but anytime they are listed, once they meet up the regulatory requirement by submitting the audited accounts and all the quarterly reports they need to submit, exchange is going to lift the suspension. But it's part of our buy recommendation because we had to work on their financials and it was fine. So in preparation for investors that want to take position when the company is being lifted from suspension. But if you also look at the industrial and insurance index, we also have some other stocks, the likes of ICO Insurance and Alasaco. So you can also buy into those two companies. Please unmute your mics so that you can. Okay. Somebody said this company seems not to have integrity since they cannot fulfill obligation. It has something to do with integrity sometimes. Sometimes companies do have issue with their auditor, and then they usually notify the exchange. If they don't meet up within the time they are asking for extension, sometimes exchange, they usually suspend them. So it has something to do with integrity. Also, it's part of the requirement any listed companies must fulfill. They must fulfill their obligations, but that has nothing to do with integrity.
Hello, good morning.
Okay. Good morning, sir. Go ahead, sir.
Okay, I wanted to confirm in the fixed income scheme, why does the percentage vary when it comes to quarterly and annually?
Please come again, sir.
I said for the fixed income scheme. Are you hearing me?
Yes, sir, we can hear you.
Okay. I want to confirm why does the percentage varies from quarterly to annually? And also, does the fact of this total sum, hold on, I have another question. For the fact of the total sum, does it determine the percentage? Can that influence the percentage?
Okay, I presume that you are referring to the Nigerian Treasury Bills auction results. Is that right?
Yes, please.
Okay, so thank you so much for the question. So the thing is that what actually determines the stop rates, there are two factors that determines the stop rates. One, what's the willingness of the borrower in terms of what is their appetite to borrowing? When the government is quite desperate for funds and they need to mop up as much money they can get from the markets, that might influence their decision to increase the rates. And also, if the general direction of the government is to make sure we have a reduced rate in the market, they could also make the stop rate be at a particular level. But what we've observed over time is, looking at 2024 from the chart we presented in our presentation, we noticed a significant jump in rates, I think around February 2024, where we went from about 11% to 19%. And from there, we've seen that consistent increase until November 2024, when rates were at 23.5. So what we've observed over time is the federal government is trying to reverse that trend, such that they're trying to bring the rate back to a moderate level one, to make sure that to help corporate organizations reduce their borrowing costs, and also to reduce government borrowing costs. So 2 factors basically influences rate at the auction. One, what is the subscription level, and what's the appetite of the government in terms of what they're looking to borrow. So over time, the rate changes depending on those 2 factors. If the government is very desperate for funds, we can see them increase rate to a particular level just to make sure they accommodate as many subscriptions as possible.
Okay, because of time, we'll be able to entertain other questions. I think maybe probably next time we meet, we're going to answer some of those questions. We're going to note some of those questions. So we have come to the end of this presentation. We want to say thank you to all our clients. We acknowledge your participation and then your contribution. So we remain gratitude to all our valued customers. So we want to wish you a successful week ahead. Thank you. Good morning.